It's easy to think as a business owner that VAT registration is simple. Hit the threshold, register, move on. But actually, the threshold is almost irrelevant. The real question is who your customers are. First, the legal flaw. According to gov.uk, you must register for VAT when your rolling 12-month taxable turnover exceeds the current threshold. You also have to register if you reasonably expect it to exceed it within the next 30 days. Miss either trigger and HMRC can charge you VAT backdated to the date you should have registered. That bill comes out of your margin, not from customers who have already paid, so the compliance deadline is not optional. But once you know that, the more interesting question is whether you should register before you have to. And so here is the decision variable that most people overlook. Who is actually paying your invoices? If your customers are VAT registered businesses, they can reclaim the VAT you charge them. So when you add VAT to your price, it's largely invisible to them. The gross price does go up, but their net costs stay roughly the same. That means early registration does not damage your competitiveness with those customers. But if your customers are end consumers, they cannot reclaim VAT. Every penny of it lands on them directly. So you have two choices: absorb it yourself and take a margin hit, or pass it on and risk losing price-sensitive customers. Neither option is free. A freelance web developer selling to agencies faces a very different calculation than a florist selling to the public. Same threshold, completely different strategic impact. That's why your customer base is the real decision variable and not the actual number itself. If you are mostly B2B with real input costs, voluntary registration is worth modelling. VAT is collected on behalf of HMRC and doesn't actually belong to you. But once registered, you can reclaim the VAT on your own purchases. If you are spending meaningfully on equipment, materials, or services, that reclaim can improve your cash position. Starling Bank illustrate this with a straightforward example. A business with significant costs can see a real profit improvement simply by reclaiming VAT on what it buys. But the trade-offs are real for every business. You will typically file quarterly VAT returns, so there is an admin overhead, even with accounting software. And cash flow timing matters. You collect VAT from customers and hold it until the return is due, which can create a false sense of liquidity. The risk is spending money that belongs to HMRC. So voluntary registration is not a free win. It's a trade-off worth calculating, not assuming. Here's the rule of thumb. Start with your customer base. If most of your customers are VAT registered businesses and you have meaningful input costs, model what voluntary registration looks like. The numbers may well work in your favor. If most of your customers are end consumers and your margins are tight, treat registration as a cost to plan for, not a benefit to chase. Either way, check the current threshold on gov.uk before you decide, because the figure has changed before and can change again. And if the decision is material to your business, take it to an accountant rather than guessing. The calculation is straightforward, but the consequences of getting it wrong are not. If that was of value, subscribe to the channel for one real business question answered every video. For the same clarity in writing, the website and newsletter is 5minutebusiness.com.